Up next, we review the latest of what's happening in the grain markets. Heather Ramsey is joining us on the stage from the ARC Group, all decked out in your best holiday apparel, Heather.
I'm ready for Christmas. That's right.
You like to do that when we visit with you here in December. Did you bring some holiday spirit to the markets? Give us a little green on the screen.
You know, I tried.
You tried. No
but
luck this week?
unfortunately, it kind of matches my blazer today. So it's been a little bit of a challenge over the last couple weeks here to get this market to do what the farmer wants it to do. We're starting to see some signs of life, which I like to kind of attribute to we've taken all the bad out at this point. Like how much lower can we go, I think is the question.
Don't ask that question, Heather. You know what's going to happen.
I know. But it never fails that about the time everyone feels that it's all doom and gloom or it's all to the moon, something changes is kind of what I live by, I guess. And we've started to see that over the last couple weeks. This weather market that we've been talking about, the weather issues in South America have finally started to come to the market. And so that's helped us kind of start the climb out. And we've seen a little bit of a encouragement there, so to speak. This week specifically, we've kind of had some not so friendly vibes coming from the energy side of the market, and that's really starting to weigh on things. So we're trying to fight energy issues with, export increases and weather. So kind of a mixed bag of things.
Yeah. Let's back up a little bit, I guess, too, and recap where we sit corn and soybean prices right now as we near the end of the year. Somehow we say that.
Yeah. So when you're looking at this 23 crop, our March board sitting between kind of a 460 to 490. We did peak high this morning here between 460 and 490 March futures on corn. When you look at soybeans as well, we're sitting somewhere between like a 1270. We do see upwards of right at kind of a $13 futures, a little bit above $13 futures off and on here. So those are not the worst numbers we've ever seen before, but they're not great when you look at what this 23 crop cost us. So anytime we can hit the higher end of those two ranges is a time to be trying to take advantage of either that current month or some deferred pricing into that 23 crop as we try to finish it out and sort of, put it to bed and move on to 24, because that's happening sooner than we would all like it to happen.
As we do look back on 2023, though, Heather, I think the challenge this year has been what could have been. You see the prices of what we could have had, and then you're sitting here looking at what we could get today. There's a discrepancy there.
Right. It's been a challenge. Normal years where Mother Nature cooperates, we feel very confident early on taking swings at production. I think even our irrigated guys had a little bit of a challenge because dry land pulls everything, right? So whether you were a full drylander or had some dryland acres mixed in, it kind of created some unknowns on how much we felt comfortable marketing. Insurance prices, thankfully, those floors set in the spring were very favorable for us. However, when you don't come in with massive losses, you don't see those large indemnity payments. And so you should have done the work in between. And that's kind of where we're living, where we maybe some of us didn't do enough work in between. I think that's been the biggest challenge and kind of takeaway. And the lesson was, hey, go back to doing what you know how to do. Stay disciplined in your marketing, because trying to outguess it year over year does not get you ahead at the end of the day. And that's kind of where we end 23 at.
You say we don't try to outguess it, but let me throw some questions your way to get your thoughts, maybe your guess on what's happening. Yeah. You can mix in some facts there, too, of what you understand of the markets. The question came in this week, had to do with somebody holding corn right now, deciding if to sell by the end of the year. Your thoughts, if you're holding corn at the elevator paying storage, could we see a, end of the year rally, I guess, is the gist of the question?
I think there are more effective ways to take advantage of that end of the year rally than necessarily leaving it in storage and paying commercial storage. I also think that applies for on-farm storage. A lot of guys, tend to think on-farm storage is free. No, it's definitely not. So if you've got grain that's unpriced, you really need to look at what's your best execution. In my opinion, has been to go ahead and price that grain, generate cash on hand. If you're extremely bullish, if you think a rally is coming, limit the amount of investment you want to put into that rally. Spend 8 or 10 cents putting some limited upside back on so you can take 20 or 30 cent rallies and pocket them, but generate the cash, because we all know that this crop was expensive. There's operating notes to pay down. Bank is looking for their interest payments, all of the above, right? So have that cash on hand so that you can make those controllables, happen, and then utilize a smaller budget instead of an almost $5, risk out there. Put an 8 to 10 cent risk out there instead. And if the rally comes, great, you get to participate. And if it doesn't, then you're protected because you've already sold.
Let's call this Heather's Big Two. What are the big two things we should be paying attention to as we're going to flip that calendar here, and it's going to be a few short days and enter 2024?
Yeah, I honestly think the big two probably goes together. That would be corn exports for the U.S. tied with South American corn production issues in southern Brazil. I really think you need to focus on the southern Brazil. We haven't really traded much of those corn issues. So those two kind of go together. Southern Brazil, corn issues paired with U.S. corn export increases. My opinion for the last several months has been if this is lows on corn exports for the U.S., then the only way is up. So that's what I want to see.